Hi, and welcome again to another edition of Market Analysis for today, November 15th of 2024. I'm Giovanni Benacourt, and this is a recording previously to the, about 15 minutes previous to the open of the U.S. session. It's 9:13 Eastern Standard Time. All right, so, it's only been just over a week since the election, and Federal Reserve Chair Jerome Powell is already raining on President-elect Donald Trump's parade. He wasn't trying to. All Powell said was that the Fed will act carefully and wasn't in a rush to lower interest rates. That should be obvious, given that the data just this week showed inflation is still a little hot. But traders quickly dialed back expectations for another quarter-point cut in December. The reaction from stocks was even bigger. All three major indices fell yesterday, while Trump has mostly bolstered markets so far. It didn't help that the nominated vaccine skeptic Robert F. Kennedy Jr. To his cabinet as healthcare stocks were some of the biggest losers. Not all sectors were equally gloomy. The S&P 500 Banks Industry Group finished the day where it started and is still up more than 8% in the past month. JP Morgan Chase CEO Jamie Dimon explained why. He said a lot of bankers have been dancing in the streets after Trump's win because regulation under President Joe Biden has crimped lending. So he says, while Trump ruled out bringing Dimon into his cabinet to help cut the red tape, investors are still expecting the former president to make life easier for business. The question now is how much of a boost, given how much shares have already risen on so-called Trump trades. With that being said, let's take a look at what we can speculate for today's market fluctuation. Obviously, we are in the red. We have broken that 21,000 psychological round number. So therefore, and the market is continuing to move lower. So therefore, let's just use our moving averages. The 20-day moving average within the Bollinger Band is going to be our first level. And the second level is going to be that 50-day moving average that I have there in the yellow line. So here's the first level of support. I'm speculating that the market will come down towards that level. So therefore, the first level of resistance is going to be that 21,000 psychological round number. So now let's use that as resistance. And the second level of resistance, we can use yesterday's high. Yesterday's high. Boom, 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 right somewhere around here. Okay, so there we go. So the speculation for today, market fluctuation is down. So look for sales, perhaps reversal of these moving averages. That's for the NASDAQ on this daily chart. Then we'll take a look at the S&P 500. So the S&P 500 as well is moving lower. So again, let's just use those two moving averages as our level of supports. Our first level of resistance is going to be that 6,000 level. That's a psychological round number. And the second one, since it's way too close, let's just use that high that was made back on the 11th. That's for the S&P. So selling the S&P, selling the indices so far, looking for reversals of those moving averages. Again, for the downs, also looking to move lower. So let's just use those moving averages as our possible level of support. 44,000 again as a level of resistance. Since before it was support, it was broken. And the high, the next one, we can also use that high that was there, which I doubt we're gonna be getting there today. It's just gonna be most likely, pushing lower. That's for the indices. Let's take a look at the crude oil. Okay, so crude oil, yesterday did a nice fluctuation to the upside. It picked its head above 69, which it was basically what we were looking for initially. But today it did open with a gap down because this candle opens low, it closes high, and it opened with a gap down. It hasn't been closed. It did rebound off that level of support that we have placed yesterday, but that was a great reversal opportunity. So therefore, let's just give it a bit more room because I think it's going to continue to move lower. Let's use our our second level of support down here at around 65, and 65 to 75 is nice. And that lower Bollinger Band for Crude oil, even though it has looked like it has rebounded, but as long as the dollar index continues to rise to make new highs, that's going to put pressure on commodities. So for now, you can either speculate that the market will recover and close that gap, which usually happens, but now it's not a golden rule, or it will continue to move lower. I will be staying out of it. There's no really direction in it. So Nat Gas as well. It opened with a gap up because this candle opened at 2.545, but it's trending lower. Okay, so it's pushing lower. But it did obviously yesterday broke that level of support, so we have to bring that support, that second support, down to this crossing of the moving averages. And let's just use 245 as our level of our first level of support. As far as resistance, let's just use 260 as our first level and the upper boundary band as our second level. So I'm bullish on Nat Gas because demand will pick up in the coming weeks. But right now, it has fluctuated to the downside. It hasn't even closed that gap where it opened on the 11th. All right, so basically on Monday it opened with a gap up. So let's see if that's the direction where they're going towards that. Then gold. So gold, given the fact that the level that we placed yesterday wasn't broken, was barely violated. I'm gonna keep the same levels here, but I'm looking at gold just to fluctuate really sideways. 2,500 is where the consensus will be, but obviously, given all of the scenario behind Trump's election, if you go back to 2016, gold did drop about 16% when he was elected, and so therefore we are seeing that scenario. We have seen that the previous 5 sessions we were in the red. Our trend line has been broken, however. That could have been that's a throwback to that level of resistance, and perhaps gold could jump back up to the level of resistance, and back to what we have. But for now, I'm just speculating that this puppy is gonna just move sideways. Then let's take a look at silver. Silver is doing nicer than gold in reference that there's more volume in that contract. So I am speculating that we are gonna go move higher. So $31 is our target. So buying silver initially. Copper. So copper is also looking to fluctuate. It has fluctuated to the upside. I mean, it did a nice bump during the London session, but now it has retreated. It could be profit taken from that. We do have an inverted hammer over in a kind of doji. That does implies a change of direction. So let's just continue to look for opportunities to buy in, to come into it. Bitcoin, right? So Bitcoin, we have a president that is pro Bitcoin, and he's making, he obviously has Elon Musk behind that. Also, he's gonna be doing a lot of things with it. And Vivek is also pro Bitcoin. And he did say that he's gonna make the United States with his last presidency to become the hub of Bitcoin, of cryptos. So hey, Bitcoin 100,000. When we will get there, it's not if, it's when. So then we have the currencies. The euro is looking to sustain itself above 105. Let's see if that happened. This fluctuation to the downside is pressure from the dollar index being, gaining ground. Then we have the pound. The pound has been on a tear to the downside. Let's see if we hit that 126 target, and that will happen as we see that the dollar index makes another move to the upside. It did fluctuate to the downside. Obviously, that is recovering. So 107, 105 is right there. That's right there. So keep that in mind. Keep the dollar index in your radar. All right, that's it for me. Have a nice weekend, and I'll see you on Monday.